Welcome back to the channel, or welcome to the channel if it's your first time here. My name is Troy, and congratulations on finding the only weekly stock list you'll ever need as a dividend investor. In this series, I outline the 5 most important dividend stocks that you'll need to know about going into each and every week. Now, there are literally thousands of dividend stocks out there, so how exactly can I narrow it down to just 5? Well, I start by looking for any stock that has an ex-dividend date for the following week. In this case, that's June 24th through June 28th, which got me down to 187 stocks. Then it required those remaining stocks to have a dividend streak of at least 5 years, which brought me down to 54 stocks. Finally, I like money, so I look for only the stocks that have a history of outperforming the S&P 500 so I can make the most of it. This week, there were only 23 or 12.3% of the original list that met all of these requirements and deserved my deeper attention. From there, I spend countless hours to bring you guys the 5 most important stocks that you need to know about. So if you can take 2 seconds to click that like and subscribe button, we'll call it even. Thank you for that. And if you're not aware how top 5 lists work, these stocks I mentioned in today's video will not only get better as we go, but they're also going to become more important to know about. So make sure you stay until the end. With that being said, coming in at number 5 on this week's list is Lennox International, stock ticker LII. Lennox International is a quarterly payer in the industrial sector, paying $4.60 per share per year, with a forward dividend yield of 0.86%. Lennox International has been paying and growing this dividend over the last 15 years. They have a 3-year dividend growth rate of 12.63%, a 5-year dividend growth rate of 11.45%, and a payout ratio of 20.39%. At the time of recording, Lennox International was trading 1.34% off of its 52-week high. It has an ex-dividend date of June 28th with a payout date of July 15th. And looking here at this chart, you'll be able to see the growth of a $10,000 investment into Lennox, both with and without dividends being reinvested, compared to the S&P 500. Up here at the top, that $10,000 investment would have turned into $68,149.47, compared to the S&P turning into $33,449.49. That is a $34,699.98 advantage on the side of Lennox. Down here at the bottom, we have that same 10K, but this time without reinvesting those dividends, where Lennox would have turned into $63,251.42. The S&P would have turned into $30,681.85, which means Lennox outperformed this one by $32,569.57. And the difference between the returns you would have gotten with Lennox with the dividends reinvested and not reinvesting those dividends was $4,898.05. Coming in at number 4 is a high quality stock that also has a high quality yield. Say hello to Innovative Industrial Properties, stock ticker IIPR. IIPR is a quarterly payer in the real estate sector, paying $7.60 per share per year, with a forward dividend yield of 7.13%. IIPR has been paying and growing this dividend over the past 7 years. They have a 3-year dividend growth rate of 14.77%, a 5-year dividend growth rate of 38.91%, and a payout ratio of 88.19%, keeping in mind that this is a REIT. Now, at the time of recording, Innovative Industrial Properties was trading 7.89% off of its 52-week high. It has an ex-dividend date of June 28th with a payout date of July 15th. And this one's only got a little bit over 7.5 years worth of history, but the returns on this one are nothing to sneeze at. That $10,000 investment into IIPR 7.5 years ago with the dividends reinvested would have still turned into $77,067.13, outperforming the S&P 500 by $48,934.26. The 10K without reinvesting your dividends 7.5 years ago would have still turned into $71,824.17, outperforming the S&P 500 by $45,154.45. And the difference between reinvesting and not reinvesting those dividends was $5,242.96. First up on the podium this week, coming in at number 3 is Steel Dynamics, stock ticker STLD. STLD is a quarterly payer in the materials sector, paying $1.84 per share per year, with a forward dividend yield of 1.52%. Now, Steel Dynamics has been paying and growing their dividend over the last 13 years, and they have amazing dividend growth rates. A 3-year dividend growth rate of 29.54%, a 5-year dividend growth rate of 22.3%, and a payout ratio that makes it all sustainable at 11.92%. Now, Steel Dynamics at the time of recording might be at a great buying opportunity right now, as they were down 20.25% off of their 52-week high. They have an ex-dividend date of June 28th with a payout date of July 12th, and that $10,000 investment 10 years ago while reinvesting the dividends would have brought back $86,901, which outperforms the S&P 500 by $53,451.51. The 10K without reinvesting the dividends 10 years ago would have turned into $74,842.60, outperforming the S&P 500 by $44,160.75. And the difference between reinvesting and not reinvesting those dividends was $12,058.40. And with that being said, we're about halfway through today's video. If you guys haven't already, please leave a like as it helps me continue to grow my channel. And I also want to hear from you guys down in the comments. Do you guys own any of the stocks mentioned in today's video? And if so, how are they doing for you? And if you don't own any of them, did any of them pique your interest? But now let's get to number 2. Bringing home the silver medal this week, coming in at number 2 is Monolithic Power Systems, stock ticker MPWR. MPWR is a quarterly payer in the technology sector, paying $5 per share per year with a forward dividend yield of 0.62%. MPWR has been paying and growing this dividend over the past 7 years. They have a 3-year dividend growth rate of 26.5%, a 5-year dividend growth rate of 26.74%, and a payout ratio of 30.36%. At the time of recording, Monolithic Power Systems was trading 1.93% off of their 52-week high. They have an ex-dividend date of June 28th with a payout date of July 15th. And look in here, you can see why this one came in so high on this week's list. A $10,000 investment into MPWR 10 years ago while only reinvesting the dividends would have brought back $211,758.85, which outperforms the S&P 500 by $178,309.36. 10K without reinvesting those dividends still would have turned into $196,802.40, outperforming by $166,120.55. And the difference between reinvesting and not reinvesting those dividends was $14,956.45. Now, I know that last stock was ridiculous, but it gets better. Coming in at number 1 on this week's list is Broadcom, stock ticker AVGO. Broadcom is a quarterly payer in the technology sector, paying $21 per share per year with a forward dividend yield of 1.21%. Broadcom has been paying and growing their dividend over the last 15 years. They have a 3-year dividend growth rate of 12.88%, a 5-year dividend growth rate of 17.49%, and a payout ratio of 34.88%. At the time of recording, Broadcom was trading 0.7% off of their 52-week high. They have an ex-dividend date of June 24th with a super quick turnaround and a payout of June 28th. And what you're about to see here is borderline ridiculous. Looking at this chart, you guys can see that a $10,000 investment into Broadcom 10 years ago while only reinvesting the money they gave you in return would have brought back $321,862.52, which outperforms the S&P 500 by just $288,413.03. The 10K without reinvesting those dividends still would have brought back $259,197.29, outperforming by just $228,515.44. And the difference between reinvesting those dividends and keeping them to yourself was $62,665.23. Now, if any of you guys happen to own that last one, I might need to borrow $1 or $2 because you clearly have a lot of extras. But don't forget to hit that comment section down below and let me know how many of these stocks you own, how many of them are completely new to you and you're hearing about them for the first time, and how many of them deserve a deeper dive. Let me know down below. If you enjoyed this video, be sure to check out this video right here. But until next time, see ya.